So what do you get when the US dollar flexes, silver goes into beast mode, and tech stocks, well, just shrug a little? You get a market that's wide awake, slightly nervous, and clearly waiting for its next caffeine hit, also known as US non-farm payrolls data week. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning and welcome to your daily market brief. I'm joined by Francois Duplessis, our market analyst here at ATFX Africa. Francois, what's the game plan for today?
Good morning, Camilla. As always, we'll move into fundamentals first, technicals next, and keep it clean, keep it factual, and maybe sneak in a joke or two because, well, if the markets can surprise us, we might as well smile while it does.
Let's start with currencies. Eurodollar has had a big run recently. What's the story there as we move into 2026?
Euro USD is starting the year a little softer after what can only be described as a monster performance in 2025, its strongest annual gain since 2017. Right now, there are two key forces at play. First, a safe haven demand. The US dollar strengthened following the US military operation in Venezuela and the capture of their president. Markets haven't panicked, but they also haven't, well, clearly tilted defensively. And when that happens, the dollar usually gets invited to the party. Second, a central bank divergence. On the European side, the ECB is very much in a holding pattern. Rates are unchanged, inflation is close to target, and the ECB president has made it clear that uncertainty makes forward guidance, well, let's call it unfashionable for now. On the US side, expectations are doing most of the heavy lifting. Markets are pricing in 2 rate cuts in 2026, even though the Fed is still projecting just 1. And add in the expected announcement of a new Fed chair later this month, and will likely more aligned with the US president's preference for lower borrowing costs, and you've got a policy narrative that's still evolving.
And technically speaking, does that uncertainty show up on the charts?
Very much so, and this contrast is important. On shorter timeframes, Euro USD is under bearish pressure. The pair is trading below the 200 period exponential moving average, acting as near-term resistance around the 1.1695 area. Momentum indicators are drifting lower and the stochastic is deep in oversold territory around 15, suggesting buying interest is fading. However, and this is the key point, the daily structure remains constructive. Price is still above all major moving averages. The 100-day exponential moving average near 1.164 is acting as dynamic support, and longer-term moving averages continue to slope higher. So in plain English, short-term pressure, but the broader structure hasn't broken yet.
Let's move to commodities, because silver really made some noise today.
It certainly did not arrive quietly. Silver surged nearly 4% this morning, pushing towards $76 per ounce as geopolitical risk reignited demand for safe haven assets. Once again, Venezuela was the catalyst. The US attack and arrest of their president sent investors scrambling for protection, and silver answered the call. It had something to prove. But geopolitics isn't the only driver. Silver continues to benefit from expectations of further US rate cuts, which reduce the opportunity cost of holding non-yielding assets. Add to that ongoing structural supply constraints and strong industrial and investment demand, and the fundamentals stay supportive. China is also a big piece of the puzzle, with China producing roughly 60 to 70% of global refined silver and imposing export restrictions this year. The market is dealing with a structural deficit, and prices are reflecting that reality.
And what does the technical picture say after such a strong move?
From a price action perspective, silver is operating in historical elevated territory. Prices are trading in the mid $75 area, and momentum remains firmly bullish. And the metal broke out of a descending triangle pattern earlier today. Importantly, silver is holding above recent breakout zones after last month's all-time highs near $83 an ounce. That said, when a market moves this fast, it usually needs to breathe. Whether silver consolidates or extends higher will likely depend on how this week's US data reshapes rate expectations.
Equities, on the other hand, seem far calmer. What's happening with the Nasdaq 100?
Compared to currencies and metals, US equities are showing restraint. The Nasdaq 100 edged slightly higher this morning, up around 0.4%, as markets digested geopolitical headlines without rushing for the exits. Part of that calm comes down to context. Venezuela accounts for less than 1% of global oil output at the moment, which limits spillover risk. Energy markets are, however, watching closely, but tech traders seem more focused on what lies ahead rather than what just happened. And what lies ahead is a heavy macro calendar. We have the December US jobs report. We have JOLTS and ADP employment data. We have ISM PMIs. We have the Michigan Consumer Confidence report. So, in short, macro clarity is taking priority over headline drama. Markets are also keeping an eye on the CES Tech Show in Las Vegas, where major companies are unveiling new products, as a reminder that innovation doesn't pause, even when geopolitics keeps traders awake.
Where are the key technical levels traders are watching?
Technically, the Nasdaq 100 remains range-bound. Recent price action looks more like consolidation than collapse. The broader trend over the past year remains positive, despite a softer start to January. The index is trading around 25,320, with near-term support sitting around 25,200, with a lower target near 24,700. Resistance is around 25,600, with an upper target near 25,900. This feels less like panic selling and more like investors and traders checking the weather before stepping outside.
So, what's the big question markets are asking right now?
So here it is. Will this week's US jobs data validate expectations for 2 rate cuts or force markets to rethink the narrative they've grown comfortable with? Because if expectations shift, currencies, metals, and equities may not all react the same way. Tomorrow, we'll be watching how markets reposition ahead of Friday's jobs report and whether today's calm is confidence or just quiet before something louder.
Francois, thank you for the insights.
As always, a pleasure. And with that, we wrap up today's market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Visit ATFX.com by simply clicking the link in the description and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.